Today I have the pleasure to interview Ross Power, the head of product at Cheqd at the Nebular Summit, which is one of the side events at ECC. So apologies for the background noise, but we're in a comparatively small room and it's pouring outside. So if you hear any noises, that's probably from the rain. But pleasure to have you here, Ross.
Yeah, great to meet you. Thanks for having me.
Before we begin, could you just tell me a bit more about what you guys do and your background? How did you get into this space?
Sure. So Cheqd is a infrastructure layer 1 built on the Cosmos network, the Cosmos protocol. It's roughly 3 years old. The network launched in November 2021. And we're all in the space of decentralized identity, or it's also known as self-sovereign identity. And essentially, we focus on enabling individuals to take more control over their personal data, be that identity data or others. And we use a range of open standards and protocols to allow us to build in an interoperable, scalable way. My background, studied politics and international relations, came into the space having been interested in how blockchain can be used to build trust in emerging markets. Found myself 3 years working at Accenture, which is where I met our founders, Fraser and Anka. And as soon as they kind of got started with the mission, I quickly grabbed onto it and joined the project pretty much just at the start.
Yeah, and my understanding of self-sovereign identity is that you enable people to store their data and you don't need to have this central database where everything is stored and they can easily verify who they are. So could you just tell me a bit more about the technology that you utilize, but also what's the utility behind this entire concept? Because as a Web3 natives, we really appreciate the idea of decentralization, and we know the issues with storing all the data at one place, but could you please elaborate a bit more on this?
Yeah, sure. So a bit of internet history, because it's always interesting, I think. So the reason identity is generally seen as quite centralized is because the way the internet works, if you look at kind of the stack, what happened is over kind of the Web 2 era, identity started getting built at the application layer of the internet. So in Web 1, it was kind of like you'd sign into a service, you'd have a password and a username, and you'd sign in and you'd end up with hundreds of passwords and usernames, right? Username passwords. What then happened in Web 2, as organizations like Facebook, Google, and these kind of large organizations emerged, you essentially had this concept of federated identity, whereby you would have an account with one of these companies, these applications, and you would use that to sign into different services. And that's why the user experience of identity right now is heavily dominated by things like Google, and it creates an incredible user experience, which is frankly quite hard to compete with. The problem with that is every time you're signing in with one of these services, you're basically having to ask permission for your data, for your identity. So you don't really own it yourself. Google, Facebook, or Meta, whoever you're choosing to sign in with owns it. The whole idea of Web3 is that you're not having to ask someone permission for your data or ask someone permission to sign in. You store your own data and it's your keys to your identity, right? So somewhat similar to the idea of not your keys, not your crypto, when people talk about custodial versus non-custodial wallets and centralized versus DEXs, somewhat similar to that. Rather than you being in a centralized identity vendor, it's decentralized. So you, as a user, have access to it via your own wallet and your own identity. And conceptually, a little bit deeper, the way it works is essentially, as an individual, you're called a holder, and then issuers of identity are known as issuers, and those that want to verify your identity are known as verifiers. So you have these 3 key parties within the identity system. And it's known as the trust triangle. If you Google trust triangle, it comes up straight away. And so in every interaction we have with our identity, there's normally an issuer issuing us some form of identity data, a credential, a qualification, or whatever, and we hold that. The way that it works generally is, in the current model, is an issuer will issue you some identity data, a document, be it a university credential, a medical certificate, whatever, a passport. And when they issue that to you, whilst it is under your control, whilst you hold it, whether it's in your wallet or your drawer in your house, it's still somewhat centralized in the sense that if a verifier wants to verify that data, they're going to look up a centralized database, and so the verifier and the issuer always have a relationship directly. The way that decentralized identity works is you as an issuer issues a credential, they sign it with a signature which is stored on chain, which is known as a decentralized identifier. When the holder receives that credential, they receive and they hold that credential in their identity wallet. If they want a verifier to receive that credential, they basically just have to present their credential to them. The verifier can then go check the signature using one of the various verification methods, check that signature on chain, verify it, and it's essentially trustless because there's no need for a verifier and issuer to ever have to communicate. So it kind of improves privacy, improves trust.
Okay, and could you explain to me where Cheqd fits within this entire triangle? Do you just enable the underlying infrastructure? Because I assume that you don't collect any of the data, so you don't hold the data necessarily.
Yeah. So the way it works is, so beneath the trust triangle, it's known as, you have this thing called a verifiable data registry. And essentially the verifiable data registry acts as a ledger whereby these decentralized identifiers, these signatures, can be stored. So an organization, say it's a university, wants to start issuing credentials to their students. So the university will create a signature on chain, a DID, and that will be stored on the Cheqd ledger, on the infrastructure. And every time they issue a credential, they're signing it with that on-chain signature. That's what Cheqd is. Cheqd is that underlying infrastructure. But then in between that and the user, you obviously have the various different levels. And so what Cheqd offers is we have a pretty extensive vertical stack. So to make it possible, we focus on partnering with organizations that build the wallets and build the services, and we provide them with SDKs, software development kits, which make it easier for them to build applications, whatever their use case. So they can focus on whoever their one person, their one organization is, their use case is. We just help give them the tools to do so, using a range of open standards. So there's various different standards around the credential format, and there's various different standards around what SDK will work best with that credential format. So it's quite a nuanced and quite complex space to build in, like a lot of blockchain, but the standards are definitely converging at the moment.
Okay, and could you just run me through the onboarding process, because I had a look at your website and I was probably stupid enough to assume that I could probably do one of those self-sovereign identities myself, but I'm not sure whether that's an option. So how the entire process works, and especially me as a user, how can I use one of your identities? Because let's say I'm tired of any centralized entity to have control over my data.
So so as an end user, more of kind of like a user that just wants to collect these credentials and have their own wallet, we decided to build a separate application which uses the Cheqd network. Essentially at first, it was kind of early 2022, the Cheqd network had been launched, and we were kind of starting to explore, going to conferences and explaining what we're doing. And we realized it was quite hard to kind of communicate what we're building, and the best way is to show people rather than tell people, right? If someone sees a demo, it's much easier to convince and help someone understand it. So creds.xyz is an application that we built out in kind of April 2021. We started it, so just April 2022. And essentially that just gives you a really easy, light, no-code, low-code experience of these credentials. And so you don't need to have any technical experience to get started with it. So as a user, you basically set up a wallet. It's a ZK wallet, so all your data is kind of privacy protected and preserved. And as a user, you essentially engage with communities and start collecting credentials. Our beachhead, our first thing that we're focusing on there, because of the kind of the Web3 focus, is around Web3 communities and more communities more generally with creds, and we can probably go into more detail. So that's how you would be able to engage with it as someone who's not as technical and not wanting to build your own application. So creds helps show people what can be done with the Cheqd network, but anyone that sees creds could basically see it as, I could build something like this because I have the infrastructure and the tooling available.
And what if I want to build my application? What would the process be?
Building your application, so there's a number of different software development kits that you can kind of pick and choose from. We have everything's on docs.cheqd.io, or and essentially you're able to kind of pick and choose which SDK makes most sense to you. We also have like a lighter touch kind of way of like engaging with the network as well. It's called Cheqd Studio, and that's essentially a way you can generate APIs and start kind of building and issuing in a faster way. But a lot of the organizations that we worked with generally are quite familiar with the core, like kind of the tech, the core stack. They're just looking for us to help like advance it, keep it in line with the standards, and kind of where the direction is going in.
Yeah, I feel like we've established that the current system is not working well and efficiently, and it's vulnerable to theft. And just to provide some numerical data to support this, these arguments, is that in 2023, the consumers of the states reported losing over 10 billion to fraud, and this was increased by 14% from the previous year, and specifically in identity theft, which accounted to 23 billion of losses, which is like insane numbers, and it keeps going and going. And the data was sourced by the Federal Trade Commission, so quite reliable. I read most of the report, and I couldn't find any data on the EU, but based on the articles that I've read, we are observing a similar trend of people actually losing data, their private data, and it's leading to loss of money as well. So the EU is, as you were saying earlier on, EU is introducing new regulations, and I was listening to one of your community calls while I was prepping for the interview, and you touched upon it. So could you tell me a bit more about it, and how are you guys going to comply with these regulations?
Yeah, so I mean, and there's this phrase I heard when I was in the States once: America invents things and the EU regulates things. As I don't know if that's
so
something
applicable to crypto.
we should be proud of it or not. But I mean, that's the reason. Obviously, I mean, regulation I mean, it's kind of obvious, but like one of the things that's very applicable is like the reason we all have USB-C in every Mac now, and every phone coming out now in iPhone is because of EU regulations, right? They do make a difference, and they actually make things change, and whilst things often start in the EU, you can imagine how it kind of becomes applicable in the States, and there are things that are happening in the States that are similar. Mobile driving license is something that's happening in the States, which is happening across a number of different states in America right now. But yeah, so the EU basically has a belief that this is the direction to go in. It's better for user experience. It's better to have your identity centralized around the individual rather than the individual being like outside and it's centralized around all the other organization. It's kind of our identity is around us, so why not make it sort of about us? And so EIDAS 2.0, which is basically a European regulatory framework, EIDAS 2.0, EIDAS, and that's essentially a new kind of standard, a new thing that's emerging, a regulation which is pushing in the direction towards essentially ensuring that individuals have our identity that's managed in this kind of way. And so over the next year or two, I think it said 2025, it might be 2026 now, every member state in the EU will have to provide individuals with an identity wallet, a digital identity wallet, whereby they will be able to hold these verifiable credentials, and they'll be like heavily encouraged across these countries for individuals to do so. And so now kind of more and more organizations building these identity wallets are emerging, which will give access to individuals to be able to hold these credentials in this way. The thing that needs to make that happen, obviously, is there's obviously the regulation which is encouraging this, but the problem that we see at Cheqd is whilst regulation is great, that needs to be somewhat balanced with a business model which encourages businesses to release data and to make it kind of part of their way of working. And whilst it's all well and good to be philosophically aligned to the idea of self-sovereign identity and people having more control over their data, there really does need to be a financial reason that companies are going to shift this mindset. And so right from the beginning, right from the start at Cheqd, our focus has always been on payment infrastructure and building a business model which encourages issuers to give users their data. And so, I mean, it's often kind of understood that Web 2 and the way that the internet works is essentially the reason these organizations were to be able to become trillion-dollar, organizations over a relatively short amount of time is because of identity and data. And we sign in, we log in, and we're constantly giving away our data, and people, these organizations are able to monetize it for ad revenues and things like that. The problem is, because of the way this model is, it's very difficult to kind of foresee a world in which people in these organizations, which have requirements to their shareholders and stuff, are ever going to shift towards this model around the users unless there's a financial incentive. And so the hypothesis of Cheqd is that for self-sovereign identity to kind of come to fruition, you need a business model which incentivizes this. And so one of the core aspects of our tech stack is building commercial models right into the tech from the ground up. And so where you have kind of these, this kind of like journey across how do you kind of create the change. In the tech, we have something called credential payments, whereby issuers of identity data, issuers of these credentials, can set a fee for how much they want to charge for every verification of that credential. So they can create a new business model which wasn't previously possible. So say, for example, it's a bank, right? People often use their banking documents as a way of giving their address. Like for me, I'm quite nomadic, I'm on the move. My address is most commonly just what is on my bank. Same with universities, same with all these organizations. They can start making a revenue every single time a credential is verified, rather than an intermediary making that revenue, rather than a third-party sort of notary checker making the money. And so that's what we think is going to kind of been the kind of the area of alignment which is converging at the moment. Is regulation is going in the right direction, and more organizations in the identity space are realizing that payments is the way to make it happen.
You mentioned that there is an inherent problem with the business model, and I believe that's where your company stands, because I've read one of your blog posts that touches upon it. So could you explain to our listeners what's the problem with it and why companies are currently disincentivized to adopt those self-sovereignty in the identities?
So I mean, I guess it doesn't seem like it's such a problem. Like the organizations wouldn't necessarily see it as a problem because they're able to kind of, they're able to make money from other businesses and other ways they do their business. But like, I mean, it's one example which is kind of useful because it's quite a simple way to understand it. Say, for example, a university is issuing 30,000 university qualifications every year. The university has made money in UK, a hell of a lot of it, from charging people for their kind of academic qualifications. But once you receive your university qualification, you've got your PDF or whatever you have in your hands. Say you applied for a job, and obviously a lot of places don't actually even ask for university qualifications anymore. But hypothetically, say you apply for a job and they say, we want to see your credential. What will normally happen is that organization will pay a third party a large fee to go and do that background check. And when they do that background check, they'll basically get paid for it. The university is never making any money every time that credential is verified. So with this example, a university could say, I want to charge 10 cents or 10 pence every time this credential is verified, and that gives me a new business model, a new revenue. And so if that's 30,000 credentials issued a year, you're charging 10 cents for every verification, you start to see how a business model emerges, which means they're actually going to be encouraged to give the data away to the students. Another example is like in KYC. And so one of the big use cases we're seeing emerge and we're kind of building on is this idea of reusable KYC. And so the key aspect of this is, as an organization, say you're, as an individual, you're applying to a new bank, right? Every single time you go and do you apply, you have to go through a new KYC check. You have to do the selfie, scan your passport, get onboarded, do the KYC check. That check is incredibly high, and the figures vary, but I think for one figure I heard was for a lot of the new banks, the challenger banks and things, for a user to kind of get onboarded, there might be the customer acquisition cost might be like £100, $100. 20% of that just goes on actually onboarding them and paying for the KYC. So it's quite a high fee. Instead, if the individual has a KYC credential, you know, they can just continue to reuse. They already have it. They're already having it checked constantly against like different records and things. Whoever the KYC provider, they can just basically get, you know, a small fee. The holder presents their credential, money goes back to the provider itself. And this kind of model just can be replicated pretty much any place in identity. And so the problem is no one is incentivized to release data, and this can make it happen.
Yeah. While you're talking about universities, I feel like we can definitely bond over how much we've spent on our higher education and how no one has ever asked me for my diploma, which is like insane.
No, yeah, it's what I mean. Yeah, I think my debt would be somewhere in the region of like 50K, and I've had this conversation with people because it's an easy example to understand what a credential is, because most people have got an education credential in some way. It's more abstract when you start to look into these other kind of credentials. But yeah, I mean, yeah, it's quite insane. And also, obviously, LinkedIn, you know, LinkedIn is probably the closest thing we have to a trusted reputation. But there's very little in the way of trust on that as well, right?
Yeah.
You
can't verify. There's no way.
Yeah.
Unless you get in touch with the organization.
Exactly.
I guess.
So LinkedIn have started introducing. So LinkedIn is obviously like Microsoft. And they're Microsoft, Apple, like a lot of these organizations are now heavily exploring self-sovereign identity and verifiable credentials. And so LinkedIn, you can actually go and like verify yourself with it, and they're introducing like other aspects of verifiable credentials over time. But yeah, it remains the case. You can put whatever you want in your bio. You can pretty much say you work at any company, and there's no check on that.
Yeah. And I was just wondering about how you're gonna onboard people, and once you onboard them, and once I have my self-sovereign identity, would I have like a password for it? Or could you just explain to me? Because I see myself as a Web3 native, and you were telling me earlier on that you're building the Cosmo ecosystem. So actually my question was around the blockchain, and how do you utilize blockchain to enable this, and why is it possible just with blockchain? Can we do that in the Web2 world? But also, about the seed phrase, and like how much control would I have over my self-sovereign identity? Because if I have all of my credentials there, I'm slightly concerned that if there is any breach, then someone could essentially steal my identity, and that's a massive problem once I have everything on one place, like a single point of failure.
So this is very much focused on creds.xyz, which is this kind of separate application, same organization, same team. It's built on top of the Cheqd network. So creds, this creds will evolve in some point to be, applicable to all aspects of the way you kind of build your identity. But right now it's very much focused on community building within kind of the Web3 space, because that's where we know we've got an audience that we can engage a little easier. So in terms of like the sign-in process, from the start we wanted to make it as simple as possible. So we use a standard identity vendor, like a provider that basically allows you to sign in with Telegram, Google, Discord, email address, and that's how you just sign into the portal itself. And that's where you can get credentials issued to. And so you don't have to give like a wallet, a crypto wallet. You can just give you could give me your Telegram name right now, and I could issue you a credential to say we had this podcast. Once you arrive into the platform, you sign in with your Telegram. All the credentials will be waiting for you, but they're not basically issued yet until you choose to claim them. And so you sign into the platform with your Telegram. You'd see this Telegram user has a number of credentials available and waiting, right? So
already, sorry to interrupt. So as soon as I sign up, there will already be some credentials.
If I've issued them to you. If I've issued them to your Telegram, right? But they're not claimed. They're not in your wallet. They're just basically in like a pending. Like they're unissued. They're available if you'd like them. Once you choose to claim them, when you actually go to that claim process, you'll actually go and set up a wallet. And so that wallet it's a ZK wallet. All the credentials are stored in a decentralized storage solution. It's encrypted with, is it SHA-552? A very strong encryption method, essentially, which our head of engineering is kind of proudly built. And so those credentials are completely secured and backed up. That's basically where you get essentially your seed phrase. And you use that to sign into your identity wallet each time. If you lose that seed phrase, it's gone. Like
Yeah.
we'll work. We're like kind of making it possible to back those up. But right now, like to keep it as like privacy preserving as possible and to demonstrate that, like it's basically this idea of is not your keys, not your crypto, not your keys, not your creds. So if you lose your thing, your creds are gone. And so that's kind of the onboarding process. That's how you manage your credentials. And then once you're in, you can start collecting these credentials up. The dashboard gives somewhat of an NFT feel because it's familiar. And then once you're kind of collecting these credentials more and more and more, you can choose to, you know, put them on a public profile and people can see them somewhat like a CV. So you can share, okay, these are the credentials I've collected. I'm making these publicly available. They're by default private. You can create share links and you can customize the share links based on what reputation you would like to show of yourself, and share that round. And then on the issuer side, the onboarding process is really simple. We have a no-code studio, and it's pretty nice. Like it's quite like niche within the kind of this SSI space because we've just focused on how do you strip away blockchain and identity like complexity to the point where you're just signing in, and we created like a UI which is somewhat similar to if you were customizing your shoes at Nike. Like you basically just customize your cred, you add your photo, add description, attributes, and then you can issue it pretty simply. And over the next couple of months, we're opening up the APIs, and so organizations can start to integrate and have programmatic and automated issuance of credentials based on, based on people completing different things.
Yeah, just to bring it back to a point that you made earlier on, and I noted it down, but I didn't ask you. I might be wrong, but one of my main concerns would be that if someone issues a self-sovereign identity for me, and I put all of my credentials, then they might be able to collect too much data about me. I'm sure that it's on the blockchain, so it's not necessarily possible, or I would assume that it's not possible. But I guess if I'm asking myself these questions, then there might be other people. Yeah.
So that's maybe one of the things I didn't emphasize enough. So the verifiable credentials are not on the blockchain. So they're only ever stored in a wallet which is off-chain.
Okay.
They're always off-chain by default. And in terms of all the standards, regulations, any data that pertains to an individual has to be off-chain. And so like even that goes back to kind of GDPR, the right to be forgotten. No data that is about an individual can be on-chain because inherently nothing can be forgotten with blockchains. So your credentials are stored in your own wallet. You are the only person that has the keys and the only person that has access to it. And then the thing that's on-chain is the signature which signs the credentials. The thing about, I think the point you mentioned around kind of like people might have more access, or someone can't issue you a credential without your permission. So one of the things that emerged a year or two ago was soul-bound tokens.
Yeah.
And this idea of SBTs and using this NFTs. One of the problems with that, and our CTO kind of wrote an interesting blog around kind of this, but with soul-bound tokens, you can't really reject them. Basically, anyone can send you an NFT, right? Anyone can send you an NFT and you can have it in your wallet. If I could send you anything about your identity and you could just have it in your wallet, it's a pretty uncomfortable position because I can basically say anything I want about you, make a false claim, make a horrible claim, and that's going to be part of your reputation and in your wallet. And because it's on chain, like with the way that NFTs and SBTs work, everyone can see that. So I could say something about you, make a claim, it's in your wallet, and people now believe that. The way that verifiable credentials work is you basically can decide if you want that in your wallet. You have to accept it and you have to claim it and you have to basically choose to store it in your wallet. Okay. And once it's in your wallet, no one can see it unless you choose to reveal it. And so, people have talked about, the fear around like, as people build their reputation, does it not become like social credit scores and this kind of dystopian thing that has emerged in some countries.
It reminds me of Black Mirror episode.
Yeah, the Black Mirror episode.
Yeah, where you just like increase your social scores.
Up and down and stuff.
Yeah.
And I think that's the thing a lot of people fear around like reputation apps and services. If everything you're doing is being measured and tracked and analysed, then surely, for good and for bad, we're just going to end up rating each other. Again, going back to like the core concepts of self-sovereign identity, like you choose what you want to reveal. So and you choose what you want to claim. So your wallet isn't a public thing for all to see. So you can claim all these different credentials, but only you decide what people see, and no one's able to make a social graph about your reputation unless you're saying, you know, this is what I want to share with the world. And so if, in some ways that makes it maybe less reliable because you're not, you know, showing everything. But generally, like, you're not going to start collecting credentials which are like, you know, negative about your reputation or identity. It's just things that kind of are who you are. So yeah, the social credit score reputation thing, it's kind of quite far from what self-sovereign identity is about. It's kind of the opposite in some ways.
Okay, and you outline so many use cases on your website, so I would love to go through some of those to understand how we can employ the technology in real world. And one that I was really interested in was the community credentials. And the main reason that it attracted my attention is because you're essentially talking about interoperability. So if I build credentials on a certain platform, then I can easily use this even if I migrate to another platform, so I would not need to start from zero, which is what a lot of influencers, KOLs are experiencing now. So could you just tell me a bit more about it? Because in the digital world, I feel like it's quite important that you can transfer these credentials.
So exactly. So verifiable credentials, you know, there's various different types of verifiable credentials: JSON, JSON-LD, JWT, anon creds. These are all like.
Could you tell me more about those? Because I'm not.
Yeah, I mean, they sound like buzzwords or just tech jargon, but they're just basically different formats that people can use to build these credentials. So just like you have different formats for, you know, for different blockchain protocols and different crypto tokens like ERC20, you know, all the different like Ethereum-based ones. These are different credential formats that allow for different things, and generally they're not necessarily like, I wouldn't say they're competing with each other, they're just different evolutions of them. So some of them are more kind of rudimentary and they just have like basic, like a list of attributes. Some of them get into more complex parts of identity, so you can have selective disclosure. So selective disclosure basically means you have a credential that contains various different pieces of information, but you can selectively choose what information you share. Same with kind of like the ZK aspect of it. If you have a credential which says, you know, if you have your driving license which says your name, your date of birth, where you're from, where you were born, but you want to go into a bar or you want to buy something that requires you to be over a certain age, you don't need to show everything, right? It's a standard ZK thing. You just need to show that I'm over this age. Or if I want to vote, I don't need to give my address. I just need to show that I'm in this postal code. So these different credential formats just basically enables you to do different versions of those. The interoperability aspect of it is that, say I collect up these credentials and I want to take my reputation elsewhere, as long as these other platforms support these different credential formats, I'll be able to kind of retrieve those in kind of where I go. And so in our website we say like, take your X where you Y, right? Because that's what we want to be able to do as individuals. We want to be able to take our reputation wherever we need to use it. Whereas right now, say you have a large following on X, but you want to kind of access something via Instagram, it's not really like comparable. There's no like link. And so whilst, yeah, you might have the same username, it's quite hard to basically kind of demonstrate that, right? You can obviously take screenshots and things, but it's a different thing. So yeah, so that's kind of part of the idea of being able to like move your reputation and port it with you. Did that answer the
question? Absolutely. Another one that I'm really interested in is healthcare, because I've experienced something terrible with like one of my friends when he has a condition, he got sick, so we brought him to the hospital, but unfortunately because we didn't have like his full medical record and he's UK based, we were away on a holiday, so it was like, oh my days, I don't know much about him. He's in like this terrible condition, so what I gonna do now? So it was kind of scary because I had to like call his mom and it was late and she was worrying, and it was like nothing major, and I don't want to disclose too much information because he'll kill me after if he ever listens to this. But it's one of those where it's just unfortunate that there was like no way for me to just like quickly have access to all the vital information, so the doctors can can do their job. So could you just tell me more about it? How are you guys solving that? And have you seen interest from healthcare institutions, hospitals? Because I would assume that's like a insane use case.
Yeah, so this is probably there's a number of use cases which I think are just like my favorite use cases, which is still like kind of growing and trying to gain traction, but some of these more traditional industries, it is just hard to kind of like demonstrate and kind of bring them across, right? But yeah, like the medical use case, like again, like, I mean, if we think about our identity, we think about who we are as individuals, what's like more important to us than, you know, like our bodies, like internally, like how we are and stuff. And I think the problem is with your friend's situation is, obviously there'll be records on him on all the different places he's been and hospitals he's been at, and even within, say, the UK, obviously you've got this like NHS centralized kind of system and stuff, but often it remains difficult as you move across different practices and different locations for the data to be kind of transferred across your different practices. And so there's a constant, you know, say like you've moved from like Bristol to London, they know, okay, who's your previous GP? Okay, we need to get some records from them because they're paper-based or they're this or this, right? Imagine if every time you went to the GP or you went to the dentist or something, your records, your updates, piece of information about your experience were just like issued to you as a credential. And so you as an individual were just held, okay, this is the operation I had, this is a bad reaction I had, this was my response to an anesthetic, this was my response to this medication. These are just different things that are kind of brought into your wallet. And say your friend was in another country, as long as that country can consume these credentials, again, it goes back to the interoperability point of view, but say, you know, we're across the EU and all these identity wallets were kind of converging on the same standards. You go to the hospital, you know, they basically say, can I verify some of your credentials? You give permission, you provide that data to them. You say, look, they might say, you know, this is the thing that we want to check. So they might say, these are the 4 things that we need to check. We just want to check basically your wallet to see what kind of credentials you have. You as a user say, yeah, cool. You maybe accept them to kind of view and verify those credentials, and they can reveal that data and just see what's going on. And so, yeah, exactly. It's like one person, one identity, and then you can kind of take it where you go. And then the other thing within the medical space, and there's an organization we're close with, which is doing exactly this, is around the physicians and doctor credentials themselves. And so as a doctor, as a nurse, as someone in the medical profession, you're having to kind of learn and relearn and constantly educate yourself on different skills, be it surgery, obstetrics, all these different things that you need to learn. And a close friend of mine in Australia, she recently qualified as a doctor, and she was saying how like she needs to be able to, that she's got all these credentials that she's having to kind of provide and get, and she had to get something certified before she started her job, but she needed to go to an actual place to get them cert. Like, it's just wild. And so again, for doctors and for nurses and healthcare professionals, it's important that they are able to have one identity and move as they go across. You know, like, we're going to be in a more flexible world where people are going to, you know, you're not going to have doctor nomads necessarily, but doctors are going to want to basically say, I want to work in different regions, in different areas, and so I want to be able to take that and not have to worry whether or not I can be, you know, I'm qualified enough.
Yeah, another one is the supply chain, because it's so fractured and there's so many people within the entire supply chain. So could you run me through the use case of having these credentials within that industry?
Yeah, sure. So, I mean, I guess the basic example to say we want to ship something from, you know, from one country to another. The problem with the journey is that often the handoff process is where, you know, time gets delayed, you don't know where a product is, and obviously there's like IoT devices and more things emerging which will help you track the location of a parcel. But say something gets damaged or something gets lost in transit, it's sometimes hard to know exactly like how you're going to verify, you know, where that happened and who was responsible and things like that, and again, who may be liable for that. Verifiable credentials can come in because in each interaction you could have a credential being issued to that person and then to that product rather than person. So an identity doesn't have to be a person, it could just be an item. Right? So there's identity and there's identifiers, but you know, you say you're shipping a parcel and that parcel has an identity, parcel XYZ. Every time that parcel moves across a location, it can be issued a verifiable credential to say it has now arrived at this location, and then it can be verified. And so say for example the product arrived at your location but it was damaged, the organizations that are kind of working through the shipping process should be able to check, okay, was it verified as, was there a credential issue to it that said this is verified as untampered with, you know, in each different step of the journey. It's all to do with traceability. It goes down to like kind of the core tenets of blockchain, you know, transparency and traceability. The supply chain use case can mean that you end up with, you know, a huge number of credentials being issued, because if you imagine, you know, there's 8 billion people, right, but there's billions of products being shipped every day, and so the volumes and the potential volumes for those, and there's again the volumes for payments for those as well is very high, because you might have a, you know, a fractional price every time that credential gets verified, but people are willing to pay that price as part of the shipping process to make sure, like if it was say baked into your shipping costs, you know, when you're buying something and you said, you know, to pay extra to have a verified shipping journey, you might happily pay that extra to know that, okay, I can trust this product is kind of going to come in on time and not broken.
Yeah, I feel like we covered the use cases extensively. Could you tell me a bit more about why did you choose to build on Cosmos? Was there like any particular reason? And I know that you're not a developer, so we share a similar profile, but if you could tell me a bit more about the technology.
Yeah, sure. So yeah, I mean, from the off, like it was important for us to be able to have our own layer one. Like we wanted to basically have a network which could, you know, self-govern, self-manage. We wanted to be able to then also be able to communicate with other networks and be able to kind of leverage the tools available within the blockchain ecosystem. When we got started in 2021, ZK rollups, layer 2s, that whole kind of space which has emerged in Ethereum wasn't quite as like vast, and so Cosmos and the Cosmos SDK offered essentially the fastest way to get to a layer 1. You know, it was actually a really quite incredibly quick process going from starting to that point. So we were able to build and ship a network incredibly quickly, which was obviously positive. We're able to have a completely sovereign network, so we're completely sovereign in the fact that we don't have to rely on any other token, any other you know, central asset for gas fees and things like that. So we have our own security, we have our own set of validators, we have 50 validators on the network. We're able to manage our own kind of governance and so forth. But at the same time, the core thing about Cosmos is all about sovereignty and interoperability. So you're able to be independent but also interoperable at the same time, which is kind of a nice strength of it. So those are one of kind of the things as well. And yeah, it just offered us an opportunity to kind of build quickly and then layer on top the aspects that we wanted to. So we were always going to need to build our own modules and things like that. And so we built an identity module, a DID module, and then we built a resource module. And both of these modules basically enable us to do things like payments, trust registries, all these different things.
Nice. And could you tell me a bit more about the community DAO and how is it involved in the entire voting process? How much power they have? How do they exercise their power?
Yeah, sure. So yeah, our community's been, we got a strong community pretty quickly, and we have like a community of about, I don't know specific numbers, but like we have like 20 to 50 like core members, ambassadors who are just so committed to us, and so they've kind of, you know, been through the whole bear market and all the cycles and stuff, and just stuck with the project because they've really believed in it. And the community, obviously we have the standard channels, Telegram, Discord, regular conversations, regular updates, regular monthly community calls with them. And they're able to, you know, hold us to account. We've tried to make things as transparent as possible. We have a public roadmap on both Creds and Cheqd. We have like kind of regular updates and communicate with them. And in terms of how they can, you know, get involved, we encourage them to kind of use the community pool that we have available. And so like a lot of projects, we have a community pool which is you know, got a large number of Cheqd available in it now, and the community have leveraged that in a number of ways. They've asked to use the pool to provide liquidity to new dexes that we've launched. They've suggested using the community pool funds to support projects that want to build extra tooling on our network, which will help kind of accelerate the kind of adoption of the network. So yeah, they're very active. I don't know the exact figure that the community has in terms of, I mean, I can't remember the kind of the tokenomics right now of like exactly how much power they have, but the network is kind of increasingly decentralized, which is obviously positive. And we use, Commonwealth, which is one of the community tools, which basically allows people to have discussions and vote and so forth.
Nice. And I stalked you on Telegram, actually stalked the company, and I noticed that while I was prepping for the interview, and I noticed that you went out for coffee or lunch with the co-founder and CEO of Nexera a few days ago. So could you tell me a bit more about how are you guys collaborating with them, are you planning to collaborate with them?
Rashid, I mean, he's a great guy, super high energy and phenomenal builder. I mean, Alliance Block, Nexera ID, Nexera Alliance. I mean, Alliance Block was the previous name. They've built a huge amount of products. They've built some great stuff within compliance and KYC. And so we've kind of exploring how to leverage some of their KYC solutions and kind of partner with on that. And then they've just got a great set of tooling, which makes it easier for us to quickly onboard and build more use cases into our applications. One thing that was kind of being discussed was how we can help accelerate creds with them by using kind of their issuance and their verification models and processes. So I mean, probably more to just like will emerge after like the coffee we had and things over the coming weeks. But yeah, we're very close with them, and I mean, Rashid's awesome.
Nice. And what else is on the roadmap for you? What are you aiming to achieve by the end of the year, but also by the end of next year?
Okay, wow, end of next year as well. So on the Cheqd network side of things, we're doing a lot of work at the moment to just manage and improve the tokenomics of the network, and that's going to be kind of one of the core focuses over the next 2 to 3 months. We're introducing and improving adding a burn mechanism on the network, the one that we discussed at the beginning, and that will basically just help kind of introduce more of a deflationary mechanism on the network, which is kind of important. The Cheqd kind of the tokenomics is one thing which we'll be focusing heavily on. Also, just generally enabling us to have more. Every kind of identity transaction right now acts as a burn on the network. We want to expand that to kind of broader transactions. Also looking at MEV. So
sorry, before we move to the MEV, could you just tell me about what's the utility of the token? Why do you need a token? It's always a good question to ask yourself.
That's a good point. So the Cheqd token, CHEQ, the Cheqd token is basically used as that payment mechanism for these verifiable credentials. So as I kind of said during the kind of to build out these commercial models, you need to basically have a way in which organizations can monetize the verification of these credentials. So what an issuer does is they list a credential, and every time it's verified, they get a fee. That's done in Cheqd. One of the other things on your point as well is we want to kind of introduce stable coins and make it easier to kind of abstract away the token in some ways as well. So as a lot of large organizations don't necessarily want to be dealing with kind of a token like Cheqd, so we want to introduce things like USDC, hopefully Euro, kind of the Euro stablecoin over the coming months. And that's something that I know that Noble and Circle have kind of explored as well within the Cosmos ecosystem. So just to make it as easy as possible to onboard and to make payments of credentials. That's essentially what the Cheqd token's for. It's for kind of the commercial models and the payments of the credentials, as well as security and incentivization and things like that. And within creds as well, we've also introduced the ability to sell a credential as well. So a holder can buy a credential if they want to. So it could be they want to buy an event credential or a ticket credential, but they could also buy something. If we've got like an exclusive community reward or something, you say to get this you need to just buy it, and it will demonstrate your kind of commitment to the community and stuff like that. Because often with one of the key things about creds is Sybils and one way of kind of getting overcoming these like Sybils and bots and things like that is to say, well, you just need to pay something. And so some people are going to happily part with $1, which will help prove their reputation. And one of the things that we've been exploring is like how to increase the cost of forgery. So one way of increasing cost of forgery is a KYC credential, a real person credential. Another way of increasing cost of forgery, which is the cost it is to basically replicate or fake that you're someone else. It's to just have a really diverse, like broad reputation, which is based on loads of different human interactions. So anyway, so back to so that's the Cheqd network. Stable coins, a burn mechanism, introducing, like, improving the tokenomics more generally. We've also launched a Cheqd Studio, and the Cheqd Studio is basically an easier way for people to kind of build on top of the network. And two of the key aspects of that is payment infrastructure, so what we've talked about there, also trust registries. And trust registries are basically a way for organizations to provide organizational, like, entity trust. So anyone that's issuing a credential, you need to be able to trust the issuer. And so a trust registry is basically a list of all the organizations that I can trust. And that's something we're collaborating with the EU on, and various different organizations on.
Nice. And you were telling me about the MEV before I interrupted you.
Oh, yeah.
So I'm not sure whether you want to elaborate on this.
Yeah. So MEV, so minimum extracted value, essentially MEV, and I think it's becoming more and more popular across, like, Ethereum and various different places. Basically, it means it's just ways of which you can find aspects of the network, different parts of the kind of the tokenomics and things, and find ways of returning some value back to the treasury or wherever you want to. And what that means is that longer term, it means that your project's going to have more sustainability, because any kind of dust or tokens that can be can be reapplied back into the project and reinvested into the project just gives that longevity. And so we want to make sure we're not kind of wasting any opportunity to make sure that the network remains sustainable and well funded well into the future.
Nice. Thank you so much. It's such a pleasure to learn more about Cheqd and learning about self-sovereign identities.
Great. Yeah. Thanks very much for the time. Yeah. It was a great chat.
Pleasure talking to you.
Cheers, man.
Nice.